Live from Bloomberg's world headquarters in New York, I'm Shanali Basak.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And in just a moment, Kavita Gupta, founder of Delta Blockchain Fund, is joining us. She discusses the volatility in crypto and the development of Layer 2 solutions.
Plus, we speak with Alex Thorn. He's head of firm-wide research over at Galaxy Digital. We're going to talk to him about the crypto enforcement action as the SEC warns Robinhood that it faces an enforcement action over its crypto business.
And we're going to talk about the wealth effect from crypto as a recent study shines light on how investors are spending their digital fortunes.
All that and more on Bloomberg Crypto. First, though, a snapshot of the market today. Taking a look at Bitcoin over the past week, we do see it higher by 6.7%. The cryptocurrency surging on Friday. That followed a soft jobs report, which combined with what we heard from Fed Chair Jay Powell, actually led to a rates reset, a move into risk-on assets like crypto. Bitcoin had dropped to 56,000 on May 1st. It was the lowest level in about 2 months. Elsewhere in the crypto world, let's take a look at Ether, which is moving lower today by about, actually now moving higher today. It's in the green. We can go ahead and just say that flat, guys. Talking a little bit, too, about crypto-linked stocks. I do want to take a look at these, especially Coinbase, because shares still under pressure despite last week's earnings beat, with warnings that a crypto sell-off could hurt the business in the coming quarters. Coinbase Global shares down by 2.4%. Also, let's take a look at the crypto miner Marathon Digital Holdings. Those shares are moving lower today. This after surging yesterday on the back of news that the company is restructuring. We're going to be watching its earnings closely on Thursday. Those shares down by 1.4%. Seeing some green now on the screen when it comes to the iShares at Bitcoin Trust, ticker IBIT. BlackRock's IBIT moving higher on the day. Shanali?
Tim, you got BlackRock, I've got Grayscale, because interestingly enough, you have seen the Grayscale Bitcoin Trust seeing net outflows about $17 billion since it was converted to an ETF. But last week, the world's largest crypto investment vehicle saw a net inflow of money for the first time since January. Now, that was only about a $63 million inflow you've seen on a net basis. But of course, it does signal that perhaps the tide is turning when you've seen that many days in a row of outflows. Of course, Tim, Grayscale also looking to bring new products to market as it pertains to Bitcoin and also Ethereum in the ETF form.
Okay, I want to talk a little bit about the company formerly known as Square. We're talking about Block because we want to highlight a new strategy that we're seeing from Jack Dorsey over at Block. The company, we learned last week, is going to invest 10% of its gross profit from Bitcoin products each month into Bitcoin for investment. Now, reminder, less than 3% of the company's resources are actually focused on Bitcoin projects, but it does hold about $570 million in Bitcoin. That's as of last week. Shares over the last 4 days up more than 8%. And then remember, Block owns the Cash App. That generated $1.26 billion in the first quarter. Remember, it began by allowing people to send money to one another, but it's evolved, it's expanded. It offers the transfer of many different financial instruments, stocks, Bitcoin, and other financial products. Shanali?
And Tim, recently we spoke with Coinbase's finance chief, Alicia Haas, about how Coinbase is expanding beyond Bitcoin trading. Base, where Coinbase allows developers to create new apps on-chain, is one way that it's trying to bring new clients on board. Here's what she had to say about the potential.
There is some meme coin activity on Base, but I would focus you on this is the creative content. This is part of the process. We are seeing really exciting new applications being built on Base, like in the areas of social, gaming, and I think this is just part of the journey to get there. I think, again, the key that I want to focus on is a platform that enables quick, fast transactions, just like we move from email to text, text to WhatsApp. Lower frictions will be the path of developer growth.
For more, let's now bring in Kavita Gupta, founder and general partner over the Delta Blockchain Fund. Kavita, good to see you again. I just want to start with volatility that we've seen over the last week or so. How do you explain the volatility, especially increasingly when people are talking about, okay, Bitcoin is an asset that we don't see necessarily linked to other moves in financial instruments?
Yeah. Hey, Tim. Thanks for having me. I think the volatility we're going to continue to see, I expect to see this continuously over the summer because there's first a lot of geopolitical situations which keeps on popping up. Secondly, we are seeing that there is a pressure whenever the Bitcoin goes on a little higher, a big sell order comes in. When it moves down, we see a big buy-in order comes in. I think the global market with the ETF in, has really moving the prices in the same ranges of volatility. But I think one of the biggest one is, of course, anytime when there is a strong notice from SEC, pretty much the whole market moves. The very interesting part is this time with multiple Wells notices coming out, it didn't move to the extent people were expecting, especially after the price out from the Bitcoin halving. So it's very interesting how the market is still holding up in a very same range.
Kavita, can you double down on this thought here? Because for a while there, we've seen the SEC really start to bring the hammer down and the market really shrug off the concerns. And you're seeing new Wells notices and potentially enforcement actions come to the surface, and the psychology may be changing. How much of an impact can the SEC at this point have in really putting a clamp on the potential for crypto?
Not in the real sense within the crypto market. So people who are native crypto buyers or really believe in crypto have been there for last 2-3 cycles. It really doesn't affect them. It basically, they always end up thinking like, oh, it's a great buyer's market. But overall in the traditional market, it just creates a little bit more worry when you're as a fund of fund or you are a traditional hedge fund. Should I really do this or should I just hold on? Because already it's summer, liquidity is tight, tax season just went in. So I think it is just one more factor instead of the factor. And also I think the upcoming elections is what everybody is eyeing for. And I think September, October is when we are expecting a huge market movement with respect to it.
It is just one factor, but it's also a factor that can come as a surprise to investors of publicly traded companies that do have exposure to digital assets, Kavita. If you were to look across the landscape right now at all the publicly traded companies that are in the space, which one do you think is most susceptible to SEC enforcement or regulatory risk?
Within the crypto space or generally?
Within the crypto space.
I think if you look at crypto space, like we recently got a bunch of Web2 companies actually getting it, like Robinhood. I think I don't see susceptibility, I would say, for the word. The reason for that, to be very honest with you, would be where is the definition? I think all we're going to see a lot of noise and a lot of these companies really pushing back on SEC. And given the time horizon of the election, which everybody is looking at, where is this SEC and what is the mindset going to be? I don't think we're going to have any clarity on it at all. And if I have to pick one company, honestly, I feel that would be unfair because everybody is getting Wells notices based on the same thing. Hey, you may be trading security, but what are those securities? Have you clarified anything on it? It's still a question mark. There is no clarity on it. And so there are no answers to it. Said that, with Bitcoin being very clear and having so many ETFs, I'm not expecting ETH ETF this year for sure, given the SEC stand. But does that make any of the traditional hedge funds who have been holding ETH on their balance sheet a question? I personally don't think so.
What about for developers? If you're sitting here looking to develop on one of the existing chains, and there's so much uncertainty around how they'll be treated from a regulatory perspective, how much risk does that create, particularly because it could limit the amount of capital that could flow into those projects?
Yeah, so we are seeing, and I've been talking about this for over 2 years, we are seeing massive movement, brain drain, I would say, a lot of amazing talent leaving US when they're building on the blockchain crypto space. And I think we're going to see a bunch of it if the AI data regulations, which are also clamping down on the same direction. But in the blockchain crypto space, whether you're building on Bitcoin, whether you're building on Ethereum, Solana, Polygon, we are continuously seeing major tech talent moving to places like Dubai, Lisbon, Hong Kong, Singapore, and not having US, definitely not with respect to registration or even sharing in that tax dollar, just on the fear you are legal in the rest of the world, but you are in a gray area in one country for no reason, for changing nothing. And I think that should be a very big worry for the US economy.
Kavita, founder and general partner of the Delta Blockchain Fund, we're so appreciative of you breaking down parts of the market that people don't get to look at quite enough. Meanwhile, Circle CEO Jeremy Allaire is confident that regulation, institutional adoption, and stablecoin development is headed in the right direction. And here's what he told Bloomberg yesterday.
People would always ask me, when's mainstream adoption going to happen? What are the things that are there? And I've always said, you need regulatory clarity. You need the technology to become much more scalable and usable. right? And then you need the people, the mainstream applications that people are going to be interacting with this through, whether you're a business accepting a payment or an end user. You need those to connect up to that. All three of those have been happening.
We're joined now by Alex Thorn, Galaxy Digital Head of Research. Alex, we were talking with Kavita a little bit earlier about the uncertainties that are created by the regulatory environment, and curious from your perspective on limitations here. You know, stable coins are the closest thing to real money, I guess. But what about everything else being built on these chains?
Yeah, hey, Shanali. Hey, Tim. Great to be back. It's a great question. There's a lot of stuff being built. I think DeFi is still a huge sector inside crypto that has a lot of regulatory uncertainty and a lot of opportunity. I think if you look at where the SEC has been very focused in the US, it's primarily around questions of whether you've issued tokens that they think are unregistered securities or whether you're facilitating the trading of tokens they think are unregistered securities. So effectively acting what they say as an unregistered national securities exchange. This is a huge question for DeFi. I would say most of the inquiries and Wells notices and enforcements that have been brought by the Securities and Exchange Commission don't really touch the Bitcoin world. And so that, I think, uncertainty about the regulatory standing of Ethereum and its applications has contributed to Bitcoin's outperformance during this bull run.
Hey, Alex, the regulatory regime could change in early November with the election. I'm wondering from your perspective, as Galaxy Digital Head of Research, which presidential candidate out there right now is best for the crypto community?
I think in general, any kind of change in posture at the major market regulators would be beneficial, whether that comes due to retirement or a new administration coming into office. I think it sort of remains to be seen. I think even in the case that the current administration stays, we're likely to see some changes that are beneficial. You've got bipartisan support in Congress for changes in the way regulators have approached this industry. But there's no doubt that Republican allies in the House and in the Senate are more favorable to digital assets.
So essentially you're saying anyone who's there, apart from who's there right now, would be an improvement?
I mean, look,
is that what I'm hearing?
I think it could improve in any case, but
okay.
the prior Republican administration was more amenable, and I think now you've seen, whether it's from candidates for the Republican nomination, independent candidates, there's a swath of candidates across the sort of whole ecosystem, even Democratic challenger, that are more favorable to digital assets than the current administration.
Alex, how do you think about how this all impacts kind of projects moving forward? If we're thinking about all the uncertainty in the industry, you're saying Bitcoin is kind of exempt right now from a lot of that uncertainty. Does that just create more money flowing into Bitcoin? And what is the case for that? I mean, you've seen kind of Bitcoin level off here and really limit itself in terms of how much more interest can be drawn in the wake of the advent of the ETF and in the wake of the halving. What's the next catalyst? And is Bitcoin being suppressed at these levels kind of a cap on how big the industry could grow?
Pointed question. I appreciate it very much. I think that we've had such an extreme rise. I mean, Bitcoin's up over 280% since January 23. It's up over 50% this year. It's reasonable for any asset that has risen that much to cool off a bit. Frankly, I mean, it's almost humorous because I was on the show over a year ago, and we were talking when Bitcoin was about $22,000 about the prospects. Obviously, a lot can change for Bitcoin. From Catalyst standpoint, you have these advisor platforms and wealth management platforms that really haven't turned on selling Bitcoin ETFs on an unsolicited basis yet. When we predicted in October that there would be 13 or 14 billion in net inflows into these ETFs, that was solely relying on those wealth management platforms and advisors. And instead, we've seen about that much come in pretty much through brokerage trading platforms. So I think you'll see a lot more interest. Obviously, the macro situation is part of that. I think obviously with rates and if we see some easing on the monetary side, risk assets in general will benefit. I think broadly to the first part of your question, I think, you know, when you think of what Bitcoin developers and the ecosystem are working on now, it's getting much more interesting on layer 2s, on DeFi. I think that could drive more interest in the sort of Bitcoin investment case beyond simply Bitcoin as digital gold or a scarce, you know, non-sovereign monetary asset. But I think that core case remains very strong. I would say it is stifling, to the prior guest's point, some builders and investment in the U.S. That being said, in Q1, I think over $2.5 billion was invested by venture capitalists into 600 plus crypto-related deals. The vast majority, I should say the vast plurality of both deals and dollars invested in companies founded and headquartered in the United States. So the U.S. is still the leader. Policymakers just need to be wary that they don't stifle what could be major innovation for the future.
Alex, what about the recent flows into the ETFs? What are they telling you about the direction moving forward?
I would say that obviously we saw significant outflows over the prior 2 weeks as Bitcoin dipped below 60,000. I don't personally believe that the outflows necessarily caused the dip. I think if you look at the flows versus the daily float on Bitcoin, they're still not really the majority at all. I think you saw some folks take gains perhaps, and that accounts for some of the outflows, but something like 90+% of the capital that came into those ETFs between February and April did not exit last week. So I happen to think that the ETF buyers, particularly later when they're comprised primarily of advisors and wealth managers, will be, sort of stronger hands than short-term traders.
Right.
And I think the outflows showed that.
Alex,
we gotta leave it there. Thank you so much for your time.
Alex Thorn,
Thank you,
Galaxy
guys.
Digital Head of Research. Really appreciate you joining us.
That's all for Bloomberg Crypto. Join us same time, same place next week, Tim. This is Bloomberg.